Morning. Back on the rotation this morning. And a warm welcome to one and all. And for those of you who have not seen me before, my name is Langers, and I am the coffee-driven Scruffy trader. It's because we all know Scruffy likes a coffee, and he does with this series of videos. Why? It's very early morning. It's currently 7:15, and what I'm trying to do is kind of one trade before work, possibly two, and build up a little nest egg. And I've been live testing this now for a little while, and if you go through the series, you'll see it's had its highs, it's had its lows, but it's starting to fall into place. And this morning is quite an interesting way, because the market is looking to push down, but I do think it's going to pop up first. And the idea is we're going to try and capture that pop up before it's moved later this morning. So that's kind of the game plan, watered game. So the first trade of the day would be to the upside. So going in the face of the trade, if you like. So let me pull the charts up. We'll update the sheet because we've got a few minutes before we get into this. As you can see, even if I drop this out to the 1 hour, you can see it's starting to move down. Okay, but we're going to be looking at a 5-minute chart today. And you can see it's pushing. But what we're expecting is often the markets fake you out. And you'll hear that term quite a lot, fake out. I think it'll push up before it pushes down, just to release a bit of pressure and also to take out some stops and various other bits and pieces. It's just kind of the way the markets work. It's not necessarily stop hunting, but it's just kind of the way the mechanics of it work. Often on the opens, etc., the market will go the wrong way before it goes the right way. And it's just one of those things. It's just something that you see and it repeats over and over. It's kind of like why levels work. It likes to revisit places. Okay, and that's kind of what we're going to be edging ourselves onto this morning. So what we'll do, I'll pull up the sheet, which is here. The last trade we took was on the 10th. We held it overnight. It closed out yesterday at a profit. So we're now at 727.72. We've still got a reasonably high risk. Now, risk is something that you have to take on with a small account. You've got no other choice, basically. But these are guidelines. They're not definitives. Okay. And we're not increasing the bid size today because we didn't break 15 pips. So it'll still be at 82. Okay. And what we're looking to achieve today is to get the balance over 736.45. Now the idea of the sheet is very simple. When it started, you can see it started with £500, and we've been steadily building it up. So the equity curve isn't too bad. We came out of the gate pretty well. Got a royal smack in the teeth in July, but we still ended it with more than what we started with. So we start with 0, ended with 1, which is the good thing, and August is redeeming itself. There you go, right way through. So what it is, balances and compounding, because I compound the bid every time I've broken 15 pips. You have your targeting section up here, and then the trades and your journals, etc. the bottom. Very simple sheet. I use them all the time. The reason is it keeps me focused, keeps me grounded in what I'm doing. So let's have a look and see where we are up to. So what I'm going to be doing, because the overall trend of this is to the downside, I'm going to be a little bit conservative. Now, if this runs away with me before 7 o'clock, we may miss the train going up and then sort of use our exit point as our entry point. But at this moment in time, it's okay. It's not too bad. So it is 6:53. So I'll pause the camera now, and then I'll come back to you at 7. The reason I don't put any orders in before 7, it's nothing to do with strategies or anything like that. It's just to do with cost. The spreads are wide before 7, and you can get tagged in too early, and that's it really. It's just cost. It's just the cost of sale. And it's just one of the rules that I put in, and it seems to work. Keeps me out of mischief, because if you get caught into a trade and it goes the wrong way, and there's always kind of a burst, an initial spike at 7 o'clock, that could put you in a world of pain you don't want. So how would you avoid it? Just don't trade it in the first place. Just wait till 7 o'clock, top of the hour, and then off you trot. Okay, I'll see you after 7. Okay guys, we're back. It is 1 minute to 7, and everything looks reasonable at this moment in time. So let's have a little peek, see what we're up to. And everything looks okay. So we are going to the long side today, and hopefully this might be relatively quick. I hope so. Just kind of get in, get out, and done for the day. That's the idea with all of these sort of trades. Now, the idea with the whole trade that we're looking at, they're not meant to be sort of massive swingers, swinging for the fences, if you like. The idea is literally just to get in, get your money, get out, and do it repeatable each day. And I guess that's what trading is in a nutshell. So you're building up little amounts of money all the time, and then those little amounts of money, you have to buy what you want, car, holiday, or even build it up to a bigger pot that can eventually give you sort of a wage making pot. And every journey starts with a single step, and that's what this is. So I'll let it run out, and a few things I need to answer on the messages, and I'll come back to you when it's done. Okay guys, I'm going to head off down into the office. I often do, about 9 o'clock. It's spiked up and bounced around. Looking at it, it's still looking for a push up. But overall, I think today is going to be on the downside. But we'll see if we can still get our little push. That's the idea of today's trade. So I'll update it when I come home later on this evening.
Well, we're waiting.
Okay guys, so back home. No orders on the screen, cashed out. Fantastic. And it has given us £15.42 just by letting it crack on. Now as this account grows and I'm able to withstand the punches, shall we say, I'll be able to let these trades run a little bit longer because I'll be able to split positions and have one to close off at a profit and another one to run risk free to, well, whatever. But this is the beauty of what we're trying to achieve, and that is compound the winnings up. So that was 1542. We haven't split the trade because obviously I'm simulating the work. It's added 2% to the account today, which is superb. We have cracked the 15 pip move, so we can move that now up to 86 for the next trade. So it's now starting to gather some pace, and for all it's taken time, that's one of the things you need to be considering. You see, I think a lot of people, they're looking for the money too much, and they forget that easy come is easy go. And if you chase it very fast, you'll find that you probably lose. Hope that makes a bit of sense. Save that. Happy days. And we're ready to rock and roll. Now for all, I don't like trading on a Monday and a Friday. This might work out to be a 5-day trading plan, hopefully. My main trading, not so much, because it's based on a bigger trend, shall we say. It's like the overall market conditions, which is why I don't trade so much on a Monday. Certainly not a Monday morning anyway, because that's when the money flow comes in, and on a Friday the money flow is going out, which is why I sort of don't trade Monday morning. I don't trade Friday afternoon. The mainstays, but I try not to trade them at all. However, with this, it's slightly different because it's based on momentum, and it's the initial push of the market that we're looking for. So I'll keep an eye on it. If I find that I'm getting punched in the nose sort of on a Friday and a Monday, it'll come back to being Tuesday through Thursday. But this is what live testing is all about. Well, nailing it down, making it right. And then once you've got all of your rules in place, you can start upping the ante and putting some money into it to get some money out. And that goes back to quick money. It isn't quick. You know, easy come, easy go. Remember that one. If it takes a long time to get it, it'll take a long time to lose it. And that's just business. It's just the way the world works. So I'll do it again in the morning. We've had, it's not bad. We've had a clear run, 7 days. But it don't make a summer. Not yet. But we're one step closer. And the scores on the doors before I disappear. As you noticed, we're at 743. So even if I sort of stop now, I have outperformed the bank for this year.
In fact, I've done sterling for this month up to now. So if I took the foot off the gas, it's a 20% return this month. That's pretty good. So, but small accounts give big percentages. When you've got a big account, the percentages are very small. It's another thing to bear in mind. Anyway, stop rambling on. I'm going to go get my tea. It's been a long day, and do it again in the morning. So trade well, keep your risk managed, but above all, do what you love, and the money will follow. See you all on the next one.